Good morning, everyone. So, what's going on today with the stock market? We're rallying back, which is okay. We'll see what happens for a Friday. But the news out, the dollar is strengthening. That's a good sign. What's going on is that there's trouble again in Europe. As you know, Europe is going through a ton of issues. The war, World War III, is not exactly the most pleasant thing in the world for markets to have to deal with. And Europe is also going into the springtime, so they're not using as much natural gas. It hasn't been as cold as what everybody thought it was going to be back in November. Everybody's like, oh my gosh, everybody's going to freeze to death. Well, congratulations, we're now to spring, and everybody survived. So, no, that's a good thing. Bad problem with that at all. But the banking crisis in the United States and in Canada and in Europe and all across the globe has created a little bit of a problem because everybody wakes up today and realizes that the banks are bankrupt. Technically, they are. There's nothing new there. Banks have always been bankrupt. So here's what the challenge is. Because there's so many vacant office buildings and because no Americans or no Canadians are going back to work, they've all retired. Nobody works anymore. I don't work. I haven't worked for, how many years? 10 years now. And yet I have I have more money coming in by not working than I do by working. So I'm not in the employment role at all. And more people are like, I don't need to be in the employment role. I don't need to go to work at the battery plants to make $70,000 a year. I can create that on my own by going out and working on the working end of a shovel. I can go and create my own income. The working end of a shovel has always been a great spot to be. It's hard on your body. You better make a heck of a lot of money very early on and save that money or reinvest that money in buying machinery to be able to not be on the working end of a shovel. But it's always been a great spot to be. Just as my estates cleanout business is an exceptionally smart thing for me to be, because I might sell 1 or 2 or 3 houses per month. That's okay. But there's a lot of free time in between that. And so how do you stay working? Well, the estate cleanouts business, I'm going to be over at this estate I'm cleaning out today at about 11. And I'll work there until about 4, 11, 1, 2, 3, 4. I'll be about 5 hours. So I'll make $200 today. Just is what it is. So by the time you add up the hours that I've been there in this, 4 days, in 4 days I've made about $1,000. Do I need to go to work at the battery plant if I'm creating $1,000 on my own? No. I don't need the battery plant to hire me. I don't want to give up what I've got. I just need to do more estate cleaning. I need to have more estate cleanout in process. I need to know what I'm doing, 2 weeks from now, 3 weeks from now, 4 weeks from now. What estate am I cleaning out 4 weeks from now? That's where my business is going to. How many people am I helping buy a house in July? Well, not a whole lot in July because I'm going to be on vacation again in July. Because it's going to be camping season, so I'll be away again a little bit. Not a whole lot, but a little bit. And I can come back and forth. That's okay, because the camper is not that far away from Windsor on that reason. Hey, what if I need to go back to Windsor? Okay, great. I could just jump in the car and come back. It's no big deal. So at the end of the day, people have realized through COVID that, wait a second, I can create different things for me, or I've been wanting to create different things for me. So let's go ahead and create them. I don't need to have a job. I can create my own income. Now there's a problem. There's some big problems. We have, as interest rates are going up, if you haven't noticed yet, but if you're thinking about going to buy a new car, and we're thinking about buying a new car too. I think it's nuts myself, but I am overruled 3-1 on that one. But at the end of the day, if you're going to buy a new car, if you look at interest rates on new car loans now, they're now suddenly 8 and 9%. Does it make any sense to go buy a car? No. The reason for that is that it's a depreciating asset. So as soon as you drive it off the dealership lot, you lose $20,000. Automatically just gone. Or $10,000, depending upon the car you buy. And the interest rate is now 9% on a $60,000 car. That's so 60,000 by 9 is $5,400 a year. $5,400 a year in interest charges going to the bank, because the bank is belly up. They have no money anymore. They need money in any way they can get it. So they're charging, 9% for new car loans now. So used car loans are now 14% if you haven't been paying any attention. Are they selling any used cars at 14%? Oh, hell no. Suddenly there's no used cars being sold either. People are saying, why would I go get rid of my car that I have? Like with us, we've got a car in the garage. We've got 3 cars. There's a car in the garage with less than 40,000 kilometers on it. There's a car in the driveway with less than 15,000 kilometers on it. And there's another car in the driveway that has 54,000 kilometers on it. Do we need a new car? No. We need a new car like we need a hole in the head. Okay. Do we need a trip to Hawaii? Do we need a cruise? Yeah, we kind of do. Because we're so crazy busy creating incomes for ourselves that we need breaks. We need to be able to take breaks because we had to create this all on our own, and it's a little bit more work when you create it on your own rather than going to work every day. So how is that affecting the market? Well, the market is rationalizing the concept that the banks are all belly up. They're rationalizing the concept that all of the office buildings are now vacant. None of the office buildings that are financed, because office buildings cost a lot of money to build. None of the office buildings that are financed are full. So they're underperforming. Several weeks ago, BlackRock, the largest financial institution on the planet, walked away from several of its office buildings and said, yeah, they're going to go belly up because it doesn't make any sense to keep them any longer. Nobody's going back to work. Everybody's retiring. Or they're going out and opening up little teeny tiny businesses where they're doing their own thing. They're opening up service-based businesses at the working end of a shovel. And my gosh, the working end of a shovel is paying really well for these folks. They're never going to come back to work, or we're going to have to pay them $175,000 a year working 4 days a week to be able to get them to come back. Why go back if you're doing your own thing and you're successful at doing your own thing? Now, will there be some failure rates of people not being able to do their own thing? Sure, there will be. Of course there will be. We see that in the real estate business. Realtors fail all the time. So at the end of the day, office buildings are underperforming. Office buildings are not worth anything. They're not worth the money that are showing up on the bank's balance sheet. This office building is worth $77 million. No, it's not. It's only worth $26 million now. And there's a $50 million loss for that office building on the bank's balance sheet. Now, it's a unrecorded loss because the building hasn't been sold. But they're carrying the loss. And then in their used car portfolio, because they have a whole bunch of used car loans at, say, 6%, and used car loans are now 14%, they have an 8% loss on their used car portfolio. And used cars are actually dropping in valuation, and they're underperforming. So there's a lot of people that aren't making their car payments. So what good is having a $40,000 car loan if you're not collecting any money on it? It's a zero performing game. So if you need to go out and repossess the car, which all of the banks are doing, you also need to sell the car through an auction house, and that's where the problem is. The banks are not selling their cars, they're repossessing them, but they can't sell them because they're only worth $25,000, and the bank would have to take a $15,000 loss. And the bank can't take a $15,000 loss because their office portfolio isn't performing. So like, shit, we can't do that either. So we have to sit here and hold all of these cars, which are depreciating assets. So that's another problem. And then the third problem is the bond portfolio that the bank is holding. So the bank is holding bonds that they bought at 1% or 1.5% or 0.8%. And the Federal Reserve has raised interest rates to 3.5%. The market rate is now 3.5%. So those bonds that they have on their books at 1% are drastically undervalued from what they're being carried on their balance sheet at. Think of it as the shadow banking system. It's just one of the rules. We've given the banks all kinds of fun, funky rules to be able to try to prop them up over since 2008, when the whole system went belly up. We've been living on this fictitious Kool-Aid for this long. And now we're running into another problem. Now, the last thing to cover with what's going on in this market is that because there's a banking crisis in the United States and across the globe, everybody is running to their bank and saying, hey, take my money out. Those that believe in cash. Now there's a 35-40% of the population that says, it's all electronic, it's all okay anyway. And there's 35-40% of the population that says, no, cash is king, I better put it in my mattress. Because I want access to it. Because things are going to go on sale at some point in time. Things are not going to go on sale at any point in time. Things are pretty rare in this world. So at the end of the day, as more people run to their bank to take their cash out, which is a big problem, then those banks don't even have cash performing on their balance sheets any longer. And that's another problem. So it's 4 problems that the banks have just in this video. There's more problems to go to, but just in this video. So in essence, almost, I have to be careful with how I say this, almost every bank has seen its equity, the value above its loan basis, drop tremendously. And there's only so many places where people can get financing. So insurance companies, sure, they're stepping up a little bit. They're taking on a little bit more risk, not a whole lot of risk, because insurance companies are very, very, very conservative with how they do anything. So those other institutions that have cash are sitting there saying, well, yeah, but we only do big projects. We don't do the little projects. And so the little projects are frozen. Since there's a banking crisis, though, the thing that the Federal Reserve is basking in and is happy about is that the US consumer has frozen. There's a banking crisis. So the consumer in the last week has frozen, stopped. We're not spending money. We're not buying cars. We're not, because interest rates now are freakingly expensive. Why would I go buy a $60,000 car if they're going to charge me $5,600 a year just in the interest charge? This is stupid. Makes no sense. Unless I'm going to put, $60,000 down on a $60,000 car, then that makes some sense. But if you don't need a car, why the heck would you go buy one now? Makes no sense. So the American consumer has frozen because of the banking crisis, and the job market has been strong. However, there's weaknesses coming into the job market. Walmart just yesterday announced massive layoffs in their warehousing division, their order fulfillment division, which is what Amazon does too. And Amazon has been laying off and closing fulfillment centers all across the United States and across the globe. They're reanalyzing their footprint. Gee, we don't need as many warehouses and distribution centers because we're not selling as much stuff. So, we need some backup systems just in case there's spikes in this. But now that we're beyond COVID, everybody's going back out to stores and buying stuff. I go to Lowe's and buy stuff, or to Home Depot and buy stuff on the little bit of stuff that I might need for my business. I was just over at Walmart buying tables and shelves. But that's where I go. So at the end of the day, you're seeing less people driving, you're seeing less people buying things, you're seeing less. What you are seeing, though, is everybody and their brother. I was just out there on the freeway, driving from Windsor to Mississippi and back. I can tell you that everybody and their brother is out on the freeway right now. Semi-truck after semi-truck after semi-truck after semi-truck after semi-truck after semi-truck moving stuff around. And then car after car after car, dually pickup. I've seen more dually pickup trucks on the road that I've ever seen before. $120,000 pickup trucks. There goes another one. There goes another one. There goes another one. There goes another one. If you have a $120,000 dually pickup truck, do you need another $120,000 dually pickup truck in the next 20 years? No, the things last. That's why people are buying the darn things. So at the end of the day, people are out hitting the road. They're out spending money at hotels and restaurants. They are. But even the restaurant business will tell you it's not the same, Brian. We were just at a really nice restaurant in Nashville, and the waitress, we were talking to the waitress, and she said it's just not the same. The check counts, it looks like it's busy, but notice how people are having waters rather than buying wines. That makes a big impact on the cost of the check. Yes, they're not buying the 16 ounce, they're buying the 9 ounce. Makes a big difference in the price of the check. So then their total of tips are going down, and they have to work more tables to make the same money. And there's not as many tables because not as many people are going out to dinner. So those are the things that are going on in this economy. That's why you're seeing oil coming down. Oil's been dropping. You're seeing the regional banks aren't selling off a whole lot today. So we've got some stability coming in. The market's down just 205 points. The NASDAQ is down just 0.58. Because big cap tech, everybody says, hey, there's all this AI stuff that's going on, all this research that's going on in AI, and all this new tech that's going to be coming out here in the next 2 or 3 or 4 years as they put all this billions of dollars in it, because there's no reason to keep money in banks any longer. They're taking the money out of banks and they're investing that money into these new technologies for us in the future. And because nobody is working any longer, we need to develop new technologies around not working. And so whoever creates the best technologies about helping people not work is going to be the winner in the future. So all of these things are happening right now. It's just a natural progression of changes. And how we used to hold up the value of, say, Matterport. I'll give you that example. Matterport is a 3D camera system that was sweeping the globe back 4 or 5 years ago. And Matterport stock was soaring because every realtor needs this technology. Well, guess what? No realtor needs the technology. It was all hype. That's all it was. It was all marketing hype. And so now Matterport just went by. It was $2 a share. Is there any value to Matterport at all, to cameras at all? No. You use your Apple product for that. Apple, this phone is getting smarter and smarter and smarter. It's better than a Matterport. Why would I go buy a Matterport, a great big camera system that's clunky and heavy and going to break my back using the damn thing, and then have to learn the technology to even use the darn thing? And the house sells in 4 or 5 days anyway. Why in the hell do I even need the Matterport? Because there's huge demand on houses, because people need places to live. They need shelter from the storm at any price. Doesn't matter what the price is. So at the end of the day, Matterport is $2 a share. First Solar, okay, that's government stuff. That's $200 a share. Roblox, $202 today. What's a Roblox? Have no clue what they even do. First Republic Bank, $12.40. So all of these banks have all kinds of problems, and until we figure out how we're backstopping all of that, then this is where we're at. And now we're starting to see the economic data saying, recession, 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 on top of a banking crisis, on top of raising interest rates, on top of new car loans going to 12% and used car loans going to 20%. Is there any hope for this economy in the second half of the year? Not really, no. So they're repricing the market right now in logical ways. It's slowly stepping down. It's not like it's a great big drop. It's just slowly stepping down. It's going down 200 points, then up 300 points, then down 200 points, so a negative 400 points in 3 days. And that's a logical stepping down process as we're moving towards whatever our new reality will be. That's what's going on. Now, in other sectors of the economy, are we seeing anything that is of concern? No. Semi-trucks are still running up and down the road. More semi-trucks than ever are running up and down the road, moving goods and services to people. It was semi-truck after semi-truck, and they were humming along at 80 mile an hour out there. I've never seen semi-trucks going so freakily fast. And I'm a truck driver after 20 years of experience. So it's all good out there. I'm not seeing things that are bad. It's just the banks right now and the money process right now, because we never fixed the 2008 financial crisis. It's bubbling back up again. Could it blow up and be a great big huge thing now that we're in World War III? Absolutely yes. Does any government around the globe have any money left? No. They're all borrowing as much money as they possibly can off of their credit lines. And where does this all end? It ends at the end of a financial crisis, when governments can't pay their interest rates. The United States is up against that here pretty quickly, because interest rates are going up on our debt. It's like, how in the hell are we affording the interest on the debt? We're not. The answer to the question is we're not. Tax returns are down strongly, massively. Tax returns are down massively. Are people going out and paying things off because they're not getting income tax checks? No. I've got to start working on my income tax. That's going to be $20,000 coming out of my account, going to the government. It just is what it is. Every year, I got to write that check. 20 grand to the government. There you go, Mr. Government. Thank you for those free medical benefits. So at the end of the day, all of that is coming up as well too. money moves around, and money is getting very scarce. Gold is getting very scarce. Every place I went to, I asked, do you have any gold coins I can buy? And so I went to coin shops and I went to pawn shops. I walked in the door on my vacation in the United States. Every one of them that I could find, I stopped at. And I went in the door and I asked, do you have any U.S. gold? No, have none. None available. Absolutely none. Do you have any U.S. silver coin? No, none available. Absolutely none. So that was interesting too. I couldn't exchange dollars for anything of other intrinsic value because nobody had any. Very, very interesting thing. So at the end of the day, that's what's going on in the market. Thanks for watching. Sorry about this 25-minute video, but I wanted to explain it all in a little bit more common sense. I will shoot my Friday market update for the Windsor market. There is some amazing things that are going on in the Windsor market. Out here where I live, townhomes. Yesterday, we sold 3 townhomes here in Riverside. They're all gone. There's no more left. Again, there's no townhome in the market. None. So what does the cost of a current townhome mean? If you listed your current townhome, you can list it for more money because there's none available in the marketplace. None. None, none, none. And demand, demand, demand. Means pricing points are going up. The townhomes that sold were selling for over $625,000 each. And we sold 3 of them yesterday. Thanks for watching. Have a great day. Bye-bye.